Dear viewers, doubts are hard to miss, especially concerning the sell-off of Bitcoin and altcoins. Over the weekend, we saw the mother of all cryptocurrencies hit its lowest point since last April. So now the big question, are we in a bull market correction or deep in a bear market? I'll be discussing this in the next few minutes with Oliver Michel from tokentus. Glad you're here, Oliver.
Hello.
Yes, Saturday's crypto bloodbath ended January on a very sour note. Anyone looking to optimize by holding on is definitely starting to worry now. What about you?
Yes, Joanna. January ended with a 10% loss. That's significant. And with these developments, it's understandably tough for me to stand here. That's a given. There's too many bearish signals, yet I'm trying to present my bullish case here. As I said, I'm doing my best to convey that.
Let's break it down step by step and first look at the Fed Watch tool. We'll also consider the upcoming and already released economic data along with the news. Last week showed the Fed meeting to be a non-event again. No interest rate cuts and likely no changes soon, which was expected. Is there anything to interpret or analyze about current Fed Chair Jerome Powell's approach?
You mentioned it was a non-event, really no need to watch, but you do it to stay complete. And Peter Schiff, another gold enthusiast, nailed it. Jerome Powell was asked about the dollar's decline. Paul said, honestly, that's not his business. That's more the Treasury's job. Schiff got worked up because the dollar has Federal Reserve notes on it, which Paul is responsible for, yet he claims he's not interested. Joanna, this reflects the vibe Paul is giving off right now. Feels like he's just waiting to get through till May and dodge this bullet.
Until May? Yeah, that's one way to put it. There was news last Friday. Trump named Kevin Walsh as his pick, which was a surprise as a few others had been considered, especially for Fed policy. Now it's Kevin Walsh. We'll discuss what this means for the markets. But first we need to look at last week's economic data. And yes, this week's is lighter, but last week was eventful.
Yeah, last week we got the PPI inflation data, or producer price index. Not much change there. Previously, it was 3.0. Expected was 2.7 and it came in at 3.0, so nothing unusual. What stands out is trueflation. Last night, it was at 0.95%. So trueflation's inflation is basically defeated or the rate is really low. Even so, like I mentioned, Jerome Powell's attitude seems indifferent, like, why should I care? That's how the expectations for rate cuts look. Nothing's happening in March or April, but come May, the new Fed chair steps in and there's hope things might shift.
We've got a few figures on the calendar this week, though we might have expected more. To put it simply, the US government hit a wall again on budget deals, leading to a mini shutdown. Still, there's some news coming. Labor market data, job openings, and jobless claims, which we're looking forward to this week. Regarding the shutdown, the non-farm payrolls and January rates won't be released. This shutdown isn't as big as the last major one in US history. It's a partial shutdown. It's affecting the Pentagon, Homeland Security, and the Department of Transportation for now. But progress is being made with a draft in place, and they'll meet today, Tuesday, to hopefully pass the budget, avoiding another long wait for news. Various conflicts are still brewing, as we discussed last Tuesday. The US Navy is heading toward Iran, hanging in the Middle East if needed. This is a tricky geopolitical issue. But let's shift back to monetary policy and Kevin Walsh. Last Friday, Trump named him his pick, and he's known in Fed circles, which led to mixed market reactions. Why were the indices' reactions so mixed?
Yeah, interestingly, Jana, what we've always been caught off guard by in the past, us. Like the reports from the Magnificent Seven, Microsoft had poor results, and no one seemed to care, even though they were in all the indices. This week, Google and Amazon will report their figures, and there isn't much excitement about that either. But what really shook things up was, as big a deal as the Greenland crisis is Kevin Walsh's nomination as the new Fed chair. We'll see this soon in the charts. The announcement on Friday had a big impact across all channels. The nomination of this man will also change our way of thinking, because he's the exact opposite of Jerome Powell. Meaning he was already on the Fed board from 2006 to 2011, so he has experience during a financial crisis like the Faslau 2007, 2008 crash. To be fair, he's currently for cutting interest rates. That wasn't always the case, but I think after talking with Donald Trump, who's also now in favor of rate cuts to boost growth, which makes sense. Making money cheap so people can take out loans and use them for investments to basically fund this growth. But in a recent interview, he said that shrinking the Fed balance sheet is one of his priorities. He made that point back in 2007, 2008 as well. So he's not a QE guy. He doesn't believe in printing money to pump up the market. He's more for quantitative tightening, meaning pulling money out of the market, which results in less liquidity. So money gets cheaper when he cuts interest rates. But with this cheaper money via a QT, you actually end up with less. For banks and other investing institutions that love cheap money, losing a lot of it means less for speculation. That's his plan. To stop bubbles or overheating, like what's happening in the AI market, by not having tons of cheap money to fuel them. That's how he wants to stabilize things, by cutting interest rates for businesses and everyday people.
Yet,
Which obviously goes against Wall Street's desires. Wall Street wants a lot of money for investing, but he's not in favor of that. So he got pushback, or rather, we all felt it. The market senses these moves ahead of time, and Friday showed us what happened. The markets were overall hit by this hit. But on the flip side, this kind of philosophy naturally boosts the economy. The economy ends up being stronger than it might have been.
More resilient, probably.
Yeah, and that means if you look at the dollar, the DXY shot up, which naturally hit gold. Gold had likely reached its max at 42.36. But if he builds a strong Getting the economy stable again boosts the dollar, and people no longer need to turn to gold. That's partly why gold has been sold off a bit. Even though he's just nominated and not in office yet, it'll take months for his influence to kick in. Regardless, Friday was quite a whirlwind for us.
We posted and chatted about this on Friday in our Crypto Insights on our Telegram channel, but I'm curious why Donald Trump, who got a bit burnt with Jerome Powell, isn't picking someone who fully aligns with his views. Wash probably won't push the market liquidity. Trump wants.
For Trump, I think interest rate cuts are a big deal. Even though he was against them and usually favors a hawkish approach, rate cuts are his last resort to boost the economy. I think he's on a new path now because Donald Trump nominated him. Regarding Qt, Trump wants to focus on consumers. He wants a strong economy where money is used positively, not just for speculation. This approach should benefit consumers and make the economy strong. So, it actually fits. It should suit consumers. Wall Street, which lives off investing, isn't happy about it. The mix of interest rate cuts and QT is toxic for them. They want rate cuts in QE, lots of cheap money, and that's definitely not his plan. And like I said, Johanna, this will have consequences for us. If he's in power and pushes his ideas at the Fed, it'll impact US markets and by extension our cryptos.
Negative effects?
We'll see. You always have to separate the short term from the long term. In the short term, sure, we saw the crypto market take a bit of a hit on Friday. But once the economy stabilizes and starts to improve, we might see a soft landing. I still doubt that'll happen, but it would be nice. Then that naturally means consumers and companies have money and they can reinvest their earnings into a stable economy, since Americans thrive on invested money. They're investing pros, and yeah, where do you put your money then? In stocks and cryptos if they show strong performance?
You just mentioned it. There's still some time before Kevin Wash might come back to the Fed board. But I also read a headline yesterday saying that under Donald Trump, another candidate might jump in unexpectedly. We'll have to see, but as you noted, on a short-term basis, we've already seen effects in the US indices and the US dollar. We'll dig into that later. We noticed small dips in the US indices, what they call the wash effect. But actually, most of them rebounded pretty quickly, especially the Russell.
Yeah, we're keeping an eye on the Russell. You always point out that it represents a lot of breadth for risk on assets like our cryptos. What it's showing, because of its link to our cryptos, is basically what we still hope to see from them. Here's the Russell's development. I've added a green arrow. That was the first move with an A, B, C correction. Then we had the second move to the all-time high. The week before last, going above 2,700 points for the first time. I believe it was 2,702 points. Naturally, after such a peak, it falls back a bit, releasing some pressure. Then there's another A, B, C correction here. I assume that was Friday, which dropped into the red. And with yesterday and today, the final phase should start. Every move always has 3 phases. In the third phase, it should climb to the final all-time high, maybe in the 2.7, 2.8 or 2.9 range. Depending on how things exaggerate, we'll see. All signs for crypto developments are in place. This is a big indicator for us. It might already be a hint, like we said last week, of liquidity shifting away from the dollar, which has dropped despite Friday's wash effect, and away from gold and silver, which also dropped significantly. They're recovering, but we might have hit the peak there, and this shift, this rotation, as they say, might head towards risk-on assets, companies on the Russell, and our cryptos.
Let's take another look at the remaining US indices, Dow Jones, S&P 500, and NASDAQ. I already mentioned this, or you did, but last week we had some figures, especially for big tech stocks. Microsoft didn't meet expectations with their numbers. They're in all three indices, but it didn't have any drastic impact.
Actually, I'll start with the S&P last week. It hit an all-time high above 7,000 points, which speaks for itself. We're on the rise again, and you can see Friday's second to last candle went down, but Monday saw a great rebound. We're almost back to 7,000 points, and it's just a matter of time until we continue going up. You could draw a wedge chart here too. And still, I'm convinced the trend will keep moving up. It looks even better with the Dow. You can see Friday's red candle, then Monday more or less balanced everything out. So after Friday's washback, which was Wall Street's initial negative reaction, the US indices are back on track. The same goes for our NASDAQ. It had Friday's second to last candle, then Monday was green again, and the outlook is good today as well. I've noted some threshold limits here. They'll definitely want to break past 50,000 points. Here we go again, over 7,000, aiming for 7,500 to 8,000 as a possible final target. And the NASDAQ has a bit more distance to cover, but they should definitely reach 27,000 too. And when I look at this, look at the Russell and the three big indices, it makes me wonder, that's what really drives everything happening here for me. It really drives me in everything that happens here. I still think the markets are driven by liquidity. If there's no liquidity and no demand in the market, then prices just drop. More liquidity and demand mean equity, and crypto prices rise faster. So, in that sense, a decoupling of our crypto market from the equity markets. I would rule that out still. But when I see gold and silver booming, all hitting all-time high after all-time high, I wonder, is our crypto market, which, as you mentioned, has mostly been sold off over the last few weeks, and really since its all-time high of 126,000, is it leading this whole trend? In other words, has our crypto market peaked, especially at 126,000, and is now dropping while the others climb to their all-time highs, including gold and silver, then drop? Or is the scenario I hope for happening that our cryptos are trailing the major markets, meaning those markets hit their all-time highs first, with gold and silver leading with amazing peaks, they follow, and then is our small crypto market reaches its all-time highs. So this is the main question for me. Are our crypto markets ahead of or behind the big US indices? Hopefully behind.
Another factor that could cause cryptocurrencies to follow is the strength of the US dollar. Recently, it weakened significantly based on the DXY, but then bounced back. Are the target ranges still good, or are we still on track with the DXY?
Yes, because of Japan's situation, we talked about this last week. And even overshot our target. We saw the first movement on the DXY. Again, 3 phases. The main movement is down, happening in 3 stages. First phase, then the second, likely tied to Japan. And we went beyond our target, dropping below 96 in just a few days since our last chat. But as I said, it doesn't matter. strengthening the economy. If an economy is strong, its currency, like the US dollar, is strong too. So initially, the US dollar rose. I'm assuming once things settle, as seen in this red candle, we'll hit a third downward swing. Hopefully this will lift Bitcoin, since as I've shown, DXY goes down, Bitcoin rises, then they both move sideways. DXY up, Bitcoin down.
Ab hier.
But
passt
here
nicht
mehr.
things get a bit fuzzy.
Diffus.
Bitcoin's moving sideways and dropping while we see a big downward move. So I've noted it, Joanna. Bitcoin needs to push on this trend.
Again.
I need to do something now. It often lags a few days, as seen in these movements.
Und in dieser Bewegung
But we're already
schon lange
sind wir schon ein paar Tage drüber.
and if DXY acts as an indicator, I need to act now.
Let's check out the Bitcoin bloodbath from the past few days on a daily view. We've seen all support levels shattered, including the alleged higher low at 85. And now there's just one last support zone. Will it hold?
Yes, the last line of defense. Our purple line, marking the last true higher low at 73.6. I've dotted it to show how close
da
we
schon
are.
dran sind.
Yeah.
Here's the last all-time high I mentioned, 126 from October 6th, a few months back. We've since lost 40%. We see a downward trend with 1, 2, 3 moves before re-entering the range. It initially held at 84 and 94.5, went above, then slipped with 1, 2, 3 downward moves again. With those 3 moves, we broke just about everything. We had already broken the SMA 50 here, the red line. Then Bitcoin broke through the SMA 100, which is a key indicator, as we'll see in the weekly view. It fell below our 84,000, broke the supposed higher low, proving it's not the next higher low after. The purple line, and is now hovering near it. That's our current spot. So from that perspective, we've hit a really crucial point. And we've been tracking this purple line since March 13th, 24, Joanna, March 13th, 24. For 2 years, we've called this line the point where if it dips below, we need to rethink our approach. It doesn't mean we have to instantly sell everything, but our philosophy shifts. The philosophy is higher highs and higher lows, and once that rule breaks, we need to reassess. We'll dig into that right now. So yes, in the downward trend, the stress ramps up, especially on your nerves. So what does that mean for the upward swing? If it holds here, the Wyckoff fans will call it a Wyckoff spring. That's just the typical pattern here, this Wyckoff belly, then it slides sideways down and from there it shoots upward. Then it moves back into the range, aiming for the 100-week mark, then steps go up to the upper range limit in the 50s and the retracements. We're slightly hopeful because last weekend, a gap opened up due to those low liquidity pumps and dumps over the weekend. And the second largest gap ever on CME for Bitcoin was formed last weekend, between 77 and 84. So if the rule applies to not only close downward gaps, but upward ones too, Bitcoin should shoot up to 89.90 once those gaps close. Right now, though, it's struggling a bit.
Just to get the 80 back?
Ja,
79,80 is the
80 zu
target.
backen.
Still, you can see the green candle from yesterday. It was a fantastic day, not just any day. You can tell from the volume. It was a really significant day. This might have been caught here. We have to keep an eye on it now. The path upwards is clear and we know what's needed. We've talked about the gaps. And volume. I still think interest rate cuts, liquidity, US indices, the DX2. We covered the indicators in detail. Last Friday's wash effect definitely contributed to this. Being hit hard. It's clear, because if QT means quantitative tightening and we say liquidity drives our crypto market, the market will react. We had another low liquidity weekend dump, like 2 weeks ago. Clearly, last week, spot Bitcoin ETFs were down by a total of 1.5 billion. After 1.7 billion the week before last, it was quite a bloodbath these past 2 weeks. Top day, that was BlackRock's biggest selling day.
We always say to keep an eye on BlackRock. Not the best few weeks for them. Monday looked better, so it's crucial to watch this week to see if we get a bounce back or if it falls apart. The line, as they say, is pretty thin.
When we checked the Fed Watch tool just now, we hadn't yet brought up some crucial economic data from yesterday, Monday. The US put out ISM and PMI numbers like the Purchasing Managers Indices and producer prices, and they turned out well. We talked about this in a post yesterday, and you also highlighted how this PMI data impacts Bitcoin in a chart in the crypto channel on January 4th, namely the impact of this PMI data on Bitcoin. So why is it good news that it has risen above 50 points?
What you see in the chart isn't a sure thing, I'll say that first, but it's likely. This ISM PMI,
Institute for Supply Management, ISM and Purchasing Managers Index PMI,
is a monthly indicator of US manufacturing activity. It involves surveying 300 to 400 purchasing managers about new orders, production, employment, and prices. Their responses are combined and charted on a scale, and
the dotted line is the 50
Points.
50-point mark. And just to put it out there, that's why I've highlighted it in big red letters. This indicator is a leading signal for the whole economic cycle. In other words, some believe that as Bitcoin gets closer to being a part of the major capital markets and the crypto market as a whole does too, Bitcoin's 4-year cycle will be overtaken by this economic cycle set by the PMI. This PMI tells us that when it goes over 50, we're talking growth. If it drops below 50, we're looking at a decline. In the past, shown in orange is Bitcoin and in blue, PMI points by month. Anytime the PMI went over 50, you can see it here. I've marked it with a green vertical line. It went over 50 here and Bitcoin entered a bull market. It's not super clear here, but you can see it went over 50 and Bitcoin's growth here.
Was that COVID?
That was 21 while COVID hit earlier. And here, you can see, he has been steadily moving up for 23 years. Yes, upwards.
during this time, Bitcoin was also climbing. And then something great happened. We were at 47.9, expected 48.5, but it hit 52.6, so we didn't just break 50, we surpassed it significantly. If this goes on, it could be like those two other times.
ensure Bitcoin gets a corresponding strong tailwind, which we all hope for. So from that angle, then there are many well-known market gurus betting on the PMI. We should check it out because, as I said, there's some probability. Leading indicator, economic cycle replaces the 4-year cycle. And since it replaces the 4-year cycle for Bitcoin, and this cycle is now starting, yes, you can see that here. This wave pattern is happening because it's gaining momentum. And the crypto market is aligning more with traditional markets. Expectations are high. Despite all the bearish signs, we'll discuss in the next chart, Bitcoin and the crypto market are starting to rise.
From your lips to crypto's ears. Let's check out Bitcoin's weekly chart again. We'll cover both the bullish and bearish scenarios, as there's plenty of evidence for both. You still lean towards us being bullish, meaning we're correcting in the bull market, not in a bear market yet. But there are signs it could go differently. Let's explore the current scenarios and how you assess the odds.
Yes, that's our weekly chart, our most important one. That was our low, and since then, yes, we've been in a bull market. I think when the first bearish signals popped up, like a couple of months before the MACD turned red, we pointed it out. We said the movement could start, so we flagged bearish signals pretty early on, and they became more pronounced. That's why I'm focusing on the bearish angle right now. We saw the SMA 50, the red line has been crossed, and you can notice every time. It's been touched but never dropped below. Even more important for many analysts is the SMA 100, which is shown by the blue line when the price crossed. This blue line, we were technically in a bull market. You can also see it hovered there for a while, but is recently went down, which is not good. We won't go into the MACD right now. So the monthly chart is red. So from that perspective, we've got a ton of indicators. We talked about this beer stain, this downward movement that could drop the whole thing to $65,000 if it fully plays out. So from that perspective, we haven't seen a higher low yet. This is where we stand. All of this suggests have a bit of a bearish vibe. Those are bearish signals. And the question I'm asking myself, Joanne, is whether we're already in a bear market. Because if we keep falling, it's clear that it's no longer a correction in a bull market, but the bear market started at its peak, and we've already dropped 40% on the way down so far.
How much more could there be if we're already in a bear market? If you say 40%, yeah, we've hit that number.
That depends. We're wrapping up on a topic I'd like to revisit, but here's another question that's been bugging me recently. Besides wondering if Bitcoin is leading or lagging behind major US indices and gold and silver, there's this question. Once this red zone kicks in, yep, we're in a bear market and have been for 40% since October. The question is, if so, then this was the peak.
But it didn't skyrocket.
This is my third bull market because it definitely was one. A bull market typically wraps up with a bull run, with a parabolic spike like we've seen with gold and silver, and might soon with the major US indices. If that was the peak, suggesting we're in a bear market, I have to ask, is this what a bull market peak or a cycle peak looks like? To me, definitely not. But if it really was the peak,
and it wasn't massive, then maybe it won't be such a brutal one. If a certain strategy pulls through, it might end at
Blutigen.
65, and then perhaps that's it. So the question now is, we're in the mid-70s. Should we still drop to 65 if that's where the bottom forms and sell off then? These are the discussions happening now. So if we're already in a bear market, how much further can it go? We'll see, but honestly, this doesn't look like a peak. Peaks in the crypto market at the end of a bull run have never looked like this. Alongside lots of bearish signals, there are bullish ones too. US indices are moving, gold and silver are up, and Bitcoin seems to be following. DXY has dropped, interest rates have gone down. Right now, under Paul, the Fed is injecting tons of liquidity into the market, and not only the Fed, but globally, just saw the PMI massively turn around. That's something we can't ignore. We see the RSI. The RSI is hugely oversold, so a reversal is overdue here. We've noticed the Wyckoff spring, and there are technical chart patterns suggesting we might have hit the bottom here with perhaps a slightly higher low above the previous one. Even so, we see divergence between the RSI and the price, and the most I observe with the RSI is this move, the final move that hopefully leads to a parabolic development, typical of a bull market's end.
If Bitcoin's already taking a hit, then it's a bloodbath for altcoins. Even for big players like Ethereum and XRP, things probably didn't go well.
Right, to sum it up, we saw it with Bitcoin staying near the purple line, a sign of a trend reversal for us. Like I mentioned, the margin's very tight and borders on the extreme. Bitcoin's at this edge, just shy of the purple line. ES and XRP have also reached the critical point of 73.6. With IS, we're always discussing its long range. So I've pulled it up in the weekly chart. When things look too negative, zooming out helps put things in perspective. Here you can see. I went back to 22. Just to show, okay, that was the peak, that was the low, those are the 702 areas, and up here is the 1. And this is the range that's held since early 24, spanning 2 years. We've dipped below it, risen above it, touched it here, 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 and here, and now we're back again. So you could argue it's a support. And from there, you see the structure might pivot like Bitcoin. But if it doesn't, it drops. Then the question is, where's the next support for IS? I always mark it with a red line. That's where it previously bottomed. Expecting a drop from 2000, currently at the edge of the green range, to $1,500. That's the expectation. But you can see this movement hopeless, but to some extent intact. But at the end of the day, Johanna mainly follows Bitcoin, and we need to keep an eye on what Bitcoin's doing. This is all secondary stuff.
We've got a third derivative going with XRP. We've ventured into areas you'd probably rather not see again at first.
Yeah, I was hoping we wouldn't see them. There's an older chart where I noted the 160 mark. Again, even the weekly view here stretches far, clear into 2021, just to highlight where potential support zones are, where XRP paused on its way up at 61. And we ran into resistance there too. We saw it again on the 10th,
That's Bitstamp, which dropped to around 161. That's exactly where we stand now, Johanna, and it's moved out of the $2 to $3 range. It's also out of what I'd call the buffer zone between 1.81 and $2. It's down to 161. And now battling around 160. So Bitcoin around 73.6, the purple line, our IS near 2000, and our XRP around 61. So everything's really skating on the edge.
It's not down yet. There's a good chance this might be the turnaround, but there's also a chance
that it drops.
Like you said, they're both trailing after Bitcoin. So Bitcoin's dominance isn't really a big deal right now because the rollover still seems a way off, right?
It depends on who's chasing whom. If Bitcoin has outpaced the major US indices in gold with its 126 and is just now starting a rollover, then we'll see the rollover happen, and then it's clear we're already deep into a bear market. Also, a quick note on XRP. That was definitely an impressive move upward, but now there's nothing left. So, really be cautious if XRP drops. I don't know if these areas can hold it by day's end, but just as quickly as it drops, it can rise. We'll find out in the next week or two.
I just had to think about whether you've used the word awesome here when talking about rises, and whether you're still in the bullish camp when you speak like that. You've mentioned both scenarios, but you're still betting bullish.
Yes, I posted about it in our Telegram channel.
Since 2016, my biggest mistake was acting too soon. A plan I thought was smart to buy or sell was abandoned.
I believe the plan is solid.
There are pros and cons, and nothing's certain yet. I think with all the positive factors driving it, we've got a chance for a turnaround. But I can also see it not being as massive as described.
The bear market isn't too intense.
On both the way up and down. We haven't seen anything huge going up. No FOMO. No parabolic trends. The downturn might also be smoother. So we have a chill bear market dropping to around 60 for Bitcoin, 1,500 for IS, and maybe 1.10 or 1.20 for XRP. That could happen pretty quickly. It would be a shame to leave the market just because of a potential 10 or 15% loss, especially if you're in a tax-free zone. I mentioned this in the channel too. We have to really think about it when the time comes. Right now, what we need to do is what we need. Get comfortable with the idea that we're looking into the abyss, that this is how it is. So we're not at 105 or 10, 110 or 15 anymore, but in the mid to late 70s with Bitcoin. And you should watch closely, stay alert, and keep a careful eye on it.
For now, we're just keeping an eye on the schedule. The fun and colorful schedule. Our cameraman's highlight, and it's his birthday today. Happy birthday, dear. Schwenki on reaching your lucky double digits. We've made a few small tweaks to the schedule, or more like we've added things, but the colors have only been tweaked slightly. What did you change if we stick to the sequence and then check out the later depth or the model portfolio as well as gold and silver?
Yeah, what I've updated so far. As of today, S&P hit a new high, so we can really check off the upper tier positively. We've got that done. You mentioned gold and silver earlier. I turned the slash green because we agreed that it's crucial for us for gold and silver to drop, freeing up liquidity there.
We've also fiddled a bit with the ratios in the channel. On the day gold took a big hit, it lost as much market cap in one day as the whole crypto market is worth. So, when liquidity is freed from gold's drop, and even a bit of it flows into crypto, it'll flood the crypto market positively. I figure there's a chance we could see a big correction or at least some sideways movement, which would be good for us. Nothing much happened in the middle range for Bitcoin, except that with the higher low, what we considered a potential higher low
Has fallen.
it dropped, but compared to the purple higher low, meaning 73.6, a higher low is still possible, so I've kept it yellow for now. Yeah, Joanna, maybe. Even if it's a bit of a bummer. I've been debating if I should mark the bear market half green because I said yes.
Could be.
We're entering a bear market, and we might already be in one. That would be the worst outcome here. This part has been positively checked off and marked green. Bitcoin's past is green too. We need to turn the present red. All the altcoins need to be red. And the bear market, since it's back green, that would be a disaster. And I really hope it doesn't come to that. Instead, I hope it goes the way we've envisioned. And even if it's a bear market, I hope it's not too intense.
So light green.
We'll see. I don't think light green comes with the system.
Let's circle back to the model portfolio. And for enthusiastic viewer, wanted us to include this portfolio. Obviously, the portfolio starts verbally, kicking off our interview series. Sure, some found us later on, so for them, the end result doesn't really count. But you can't really create a portfolio for everyone every single day.
Exactly, yes. We had the guts back then and decided to create a model portfolio. We've done this a few times before. Starting June 24th, very defensively. With Bitcoin at 25%, ETH at 25%. So really,
Bitcoin at 50%, ETH and XLP at 25%.
and Bitcoin is overweighted.
Yes.
Last week we had 198, and this Tuesday, just a week later, we're just under 160. So yeah, we took a hit. That's from one week to the next. Someone even commented saying, sure, the 198 is fine, but it was probably higher at some point.
Yeah.
Yes, and we've hit over 400% before, I think. So if someone says they've lost a lot, we know what that's like. Yes, but since we got in early, we're still in the green. We'll see, maybe this was the low point and things will go back up, depending on how things play out. Or we might need to evaluate how far the bear market could drop us. We have to decide if we should exit. If it's a significant bear market, or stay put and hold on because things could be different this time than in the past.
That's your plan, which you'll obviously share with your viewers. It's also in the schedule, and you'll keep us posted on your moves. Just to be clear, this isn't investment advice, just sharing your strategy. Let's cover it one last time. That should really be the headline for today's interview. We've talked about these two possibilities several times now. Are we correcting a bull market, or are we in the midst of a bear market? Right now, we're kind of stuck between a rock and a hard place. How are you handling it?
Like I mentioned earlier, everything with cryptos feels different this time. And I'm focusing on whether the 126 was truly the peak, as mentioned before. Can a peak really look like that? The moment we say, yes, that was the peak, and we've been trending down since, marking the start of the bear market, the question is, with a moderate peak, how moderate might the bear market be? At this point, it's time to rethink. Or option 2,
we're still in a bull market's correction phase. With a 40% drop, it's certainly a big correction that took place, but because it doesn't look like a peak to me, because a peak usually has that FOMO vibe with retailers jumping in at the end. We've seen at least a slight parabolic growth, just like we've had over the years.
Since that's not there yet, I still think we're in a bull market correction. We're getting close to answering this question as Bitcoin has nearly hit its limit.
We've been listing the bullish indicators, and since the bearish trend started, the bearish ones too. So those are the two scenarios. A bull market correction or a bear market. I can't decide because I can't read this peak correctly. It would be something different. It's never been like this. And based on what we keep doing, and I've updated this to last week's final slide. Step 1, we inform. That's where we stand. In the middle, everyone has to decide for themselves how they see the situation based on the indicators. Some say it's clearly a correction of a bull market, while others think the indicators aren't too bearish. We'll find out who's right when it all plays out. No one's got a crystal ball. We will see. And last week we moved to stage 2, and I mentioned what I'm doing. You asked what I'm up to right now. I'm not buying more right now. Some people see great opportunities with everything falling. I'm doing DCA. That means buying now, and maybe again if prices drop. I'm holding steady. I'm not doing that. I'm also not selling. I think now is the worst time to sell. Why bother? I'm with those who say let's wait it out this week. We're very close. Near key thresholds that, if crossed, will clearly show the direction. I'm waiting this week out, and maybe next week too. But it's worth waiting now, because as I said, we don't have a blueprint for this. The crypto market is developing differently this time. Compared to the other two bull markets and their final runs I've seen, this time everything's different. Maybe it will turn out the way I imagine, with a parabolic trend at the end, and we can declare that this time it was business as usual.
Wie immer. One thing that always stays the same is Tuesday and our next interview. Thanks a lot for today, Oliver. I hope you bring fresh insights and better results on Tuesday so we can keep up this positive momentum. Dear viewers, we hope to see you again next Tuesday. Thanks for tuning in today.